Hello and welcome everyone to our webinar today, Top Tips for Building an AP Automation Business Case and Calculating Your ROI. My name is Jason Pisetsky. I'm a regional manager and 20-year veteran with ACOM Solutions, and we're very proud to sponsor today's webinar with Ardent Partners. In today's webinar, we will hear from Vishal Patel with Ardent Partners, followed by a brief solution overview that I will give on how we've helped organizations automate their AP process. Vishal and I will handle a Q&A session at the end of the webinar, and we certainly invite you to submit any questions that you may have into the question box, and we will open those at the end of today's presentation. By the way, you'll find the question box in the right-hand side of your screen. Let me provide just a little bit of background on our company and what we do. ACOM Solutions has been in business for nearly 30 years. We have over 2,500 active software customers, and we have offices in Southern California and Atlanta, Georgia. We provide business process automation solutions that help organizations gain efficiency and reduce their costs by removing paper from their day-to-day operations. Let me start with a brief background on Vishal Patel. Vishal is Research Director and Vice President of Client Services with Ardent Partners. He's a recognized expert in the world of supply management and accounts payable technology. He has worked closely with procurement and accounts payable groups for most of his career, researching their best practices and advising them on how to utilize technology to improve organizational performance. Vishal is a major contributor to Ardent Partners' research efforts and serves as the lead analyst for Ardent's e-payables coverage. He has conducted primary research, benchmarking, and interviewing hundreds of procurement and accounts payable organizations, and authored dozens of reports that highlighted the strategies and technologies that enable best-in-class performance. And with that said, Vishal, I will go ahead and turn it over to you.
Thank you, Jason, and hello and welcome to today's webinar. Thank you for joining. I just wanted to quickly go through our agenda for today. It's fairly straightforward. I'll do some introductions following Jason's introductions of Ardent Partners. And then I'll go into some of the important steps to consider when creating a business case, after which I'll discuss the process for calculating an ROI, specifically for AP automation, and then end with some recommendations. After that, we'll have a brief overview of ACOM Solutions, followed by a quick Q&A session. Just to give you a brief introduction of Ardent Partners and what it is we do. Ardent is a research and advisory firm focused on defining, advancing, and promoting the supply management and accounts payable strategies, processes, and technologies that drive business value and accelerate organizational transformation within the enterprise. And just to provide you a better idea of how we define e-payables, we think of e-payables as the solutions and services that automate all or part of the AP process, which at a high level we consider to be these three phases that you see on the slide here: receive, process, and pay. Now, this covers all of the processes that occur within AP from the receipt of an invoice, whether it be in a paper format, e-invoice, EDI, through to validation, matching, and approval of the invoice, and then end with the payment of it, which could be in the form of a check, ACH, card payment, whatever the form is. And just to briefly provide you with some context for this webinar, what you're going to see here is based on months of research from our analyst team, where we've been engaged with practitioners and solution providers, and this is actually the first time it's being presented, so pretty exciting for us. This research is hot off the press and was just published actually at the end of 2010. And of course, what I'm talking about is the ePayables Smart Set. And the Smart Set is a comprehensive set of research tools and templates, those listed on the slide there, and is designed to help AP organizations navigate the marketplace to understand two things. One, the underlying business value that can be derived from an investment in AP automation solutions, and two, the surest and most direct approach to attaining that value. Okay, so now let's discuss some of the key steps for creating a compelling AP automation business case. Now, one of the first activities that needs to be undertaken when creating a business case is getting buy-in and involvement from all of the relevant stakeholders. This is a fairly standard approach for any technology initiative. A larger set of project stakeholders will bring a wider set of interests, priorities, and requirements to the discussion. And the earlier these different inputs are identified and understood by the team, the sooner they can be rationalized and prioritized into a strategic plan. Also, the wider involvement of stakeholders is a classic approach in establishing project buy-in at the early stage and promoting user adoption once the project is launched. The foundation of a successful AP automation project is typically built within the accounts payable and in some cases the procurement functions. So alignment between these two groups is a must and is quite needed for an AP automation initiative to thrive and grow. And although one of the leaders is likely to come from these groups, wider collaboration is needed. So input should be gathered from and incorporated from other stakeholders. Some of these you can see on the slide. One of the most important is, of course, getting executive support from the beginning, followed by some of the key stakeholders that we believe are important. Procurement. They're an integral part of the process, of the AP process, and must be involved from the beginning. As if you think about it, the process that AP goes through actually begins in procurement with purchase orders and other processes they go through. With finance and treasury, they manage the enterprise's cash positions and will almost certainly have requirements and recommendations related to how payment terms are executed or how the solution can help improve the management of cash and working capital. IT, their understanding of the enterprise's current ecosystem as it relates to technology and general technical expertise can be leveraged in helping design the solution with the lowest total cost of ownership and help to define various integration requirements to other enterprise systems. Line of business, whose employee adoption rates will have an important impact on the overall success of the program. This very large number of business users should definitely have a representative voice in the system selection and design. And then last but not least, a stakeholder that should be considered and is often not because they lie external to the organization is the suppliers, whose level and speed of enablement onto a automated system will be a critical factor in the success of any AP automation initiative. Now, a key part of making a business case, a key part of making a solid business case is being able to provide the reviewers and approvers an understanding of the current process and the challenges being faced with that current process, but also the current costs. The challenges and pain points can only be identified and fixed once the current process is determined. So it's important to figure out what the current methods are to receive, process, and pay an invoice. I've used a fairly simple example here of a 5-step process. You have invoice receipt and data capture in the first phase, matching, validation, and approvals in the process phase, and then ending with payments. And it's important to understand how each of these steps are carried out. So are invoices being received in a largely paper-based format? How is the data on invoices being captured? Is matching and validation done manually using Excel, or is it automated? So what you also want to do during this process is establish or monitor metrics for the current process so that improvements can be monitored. Figure out how long it would take to process and pay an invoice, or how many invoices and payments are processed annually per AP staff member. Also, figuring out the cost for processing an invoice or cost of processing a payment. All of these costs, once they're uncovered, are going to be used towards calculating the ROI as well, which we'll discuss later. But overall, understanding the operational cost to run an AP department will help to determine the cost to process an invoice, which is a key metric that should be monitored on an ongoing basis. And again, there's more on this later as well. Now, for the most part, companies are still utilizing manual or paper-driven processes, and they typically face one or more of these challenges that you see on the slide here. In the business case, these challenges should be presented in detail, allowing the reader to better understand the opportunities that exist if AP is allowed to automate its function. The pain points are generally driven by a lack of visibility and efficiency in the AP process. In manual environments, it's quite likely to see high processing costs and times, high exception rates and errors, penalties, and a general lack of visibility into enterprise cash positions. Another major section of the business case is the discussion of the proposed solution. So in order to propose a solution to improve processes and fix current challenges, the organization requirements around technology must be gathered. And these requirements can only be gathered if the current process is understood well. So you can see how this all ties together. Requirements for the solution must be gathered from the relevant stakeholders, as I mentioned earlier, and this allows them to be more involved in the decisions. So for example, IT will have a really good understanding of enterprises' current IT infrastructure and will help to define any integration requirements or constraints. For example, if IT has a general policy against deploying an installed on-site solution, your search for a provider is narrower, and you can sort of weed out those that only provide that type of solution. So within this section of the business case, what you want to do is include an outline of the proposed solution and include its scope. So what is it going to do? How will it work? And also a major list of capabilities that the team would like to deploy. For example, the project scope should include details whether the solution is an enterprise level deployment or if it's specific to certain business units or regions. In some cases, an organization might choose to take a phased approach. So then it's important to outline which business units or regions will be going first, which ones will come on during phase 2. It's overall just some more detail around the scope of the project. And again, within the structure of the business case, right after proposing the solution, what you want to do is identify and quantify, where possible, the business benefits of the proposed solution. These benefits are likely to be in the form of improved performance and greater efficiency, cost savings, improved customer service, and a general enhanced level of visibility into invoice and payment data, as well as other benefits which might be specific to each organization. And when you think about creating a business case, understand that the people reviewing it are concerned first with the financial viability of the solution, and then second with how that solution will impact the organization. So it's important to lay out the organizational impact. And we think there are 4 major areas of impact to think about in the business case: the business impact, stakeholder impact, process impact and IT impact. Keep in mind that this project will involve a significant amount of change management, and the impact to the organization in these areas should not be underestimated, because the acceptance of these changes will determine the success of the overall project. So the business impact should address things such as the scope of deployment. For example, is it a regional or global project? As well, which business units might be impacted by having to adopt a new solution. In some cases, it makes sense to start with the pilot, as I mentioned earlier, and then roll out the system to the entire company later on. The general idea is to help the reader understand how the solution will impact business operations. The stakeholder impact should ideally address how the new solution will affect AP-related activities for various people in the organization in terms of improved efficiency of daily tasks, the ease with which previously manual tasks can be conducted, and the benefits of improved visibility into invoice and payment data. The process impact should address how the new solution will impact current AP processes and ensure that an invoice is properly processed and paid. Depending on the scope of the proposed solution, for example, AP or procurement might have to take on the management of onboarding suppliers, and that would be a new part that they may not have had to do before. So the fact that there are many different approaches available in the e-payables market is going to mean that there are many different ways that the current process can be impacted. So whether you're choosing to go with a scan and capture solution or e-invoicing solution, just assess the impact to the current processes. And then lastly is the IT impact, which should address the actual deployment of the solution, how it will be supported, and what, if any, integrations to current systems like the ERPs or financial systems, accounting systems, will be required. Keep in mind that the impact on IT will be different if it is an installed solution versus a cloud-based solution. An implementation plan or deployment plan is not always required in the business case, and it kind of depends how far along you might be in the process. A lot of times, implementation plans are asked for in an RFP to the solution providers, so they often provide detailed plans. But regardless, it's useful to include some level of information in the business case so that the approver can understand what is involved in the project in terms of time, resource, cost, and stakeholder involvement. Every project, technology or otherwise, is going to involve some level of risk, which cannot be eliminated completely. So in this section of the business case where you're identifying the various project risks, it's important to make a very deliberate attempt to identify all the risks, but also to think through the best ways to minimize their impact. So be sure to state the risk and include what plans you have in place that will mitigate that risk. From our research, we consider there to be 5 major risk areas. Technology. The risk here is the possibility that the selected solution does not meet AP or IT expectations or the initial set requirements. And this can be mitigated by involving stakeholders earlier in the project and during initial stages to ensure that all the initial requirements have been captured in the RFP, and also by involving them throughout the project and at specific checkpoints to ensure that the selected solution meets all the set requirements. There are several resource-related risks which should be taken into consideration. The primary one here being the lack of internal skills and capabilities to support the project. It's likely that the stakeholders identified initially will be required to support the project at various levels throughout the implementation, and the lack of this continued support could delay the project. From an adoption perspective, there is the risk that users do not adopt the new solution or are uncomfortable with it. or in general have a difficulty understanding what is required of them. And this could cause various adoption-related issues. One of the biggest risks with such projects is supplier adoption. The speed and level at which suppliers are enabled is key to a successful AP automation project. And if suppliers do not get on board with the solution, it's likely that the full value of the solution will not be realized. And then finally is the financial risk, where the risk here is the lack of funding for the project, both in the initial stages as well as the ongoing. Also, unsuccessful and delayed projects can pose a financial risk to the organization, having already invested a certain amount of dollars and time and resources to the project. I'm going to take a quick break here and introduce a poll question. Where is the poll question? Just 1 second here.
Vishal, it's Anna on the line. I'll go ahead and launch that first polling question. How's that sound?
That's fine. I think I got it.
Oh, okay. Do you have it? Okay.
Yeah, thank you. And the question there is, what is your current monthly volume of inbound vendor invoices? And if you can, I'll give you a few seconds to answer the question, and if you can provide an answer, I will show the answer in about 10, 20 seconds now. Just getting in some last responses. I'll give you about 5 more seconds to answer the question. Okay, thank you everyone for the answer. I'm just going to share the results here. And it looks like this is fairly typical in what we see. It's a wide range in terms of number of invoices received on a monthly basis. The results here show that 33% of you have under 1,000 invoices on a monthly basis, but then on the other hand, there are about 30% that have over 5,000 on a monthly basis. And it really depends on the size of the company, the industry you're in, and various other factors. But I think this is a fairly standard response that we get even in our research. I'll just move on to the next slide now, and there'll be another polling question which I'll share with you later on. This next section is going to be the second part of the webinar, which is calculating an ROI for AP automation. Now, after the project risks that we just talked about, in the business case generally includes a financial analysis section followed by the conclusion. And in the financial analysis section, this is probably the most important part of the document. This is where executives would review the financial viability of the project. And in this section, an ROI calculation is most definitely required in almost every business case. And I'll go through that in the next few slides. But what we also suggest is to include a cost-benefit analysis. So now into the second section of the webinar, ROI calculation. So here is a good chart that I like to show when thinking about calculating ROI. And it's important to consider when calculating ROI, what is going to give you the quickest and highest return. And with a project such as AP automation, a lot of the return is related to the ramp up or the adoption rate that we spoke of, which if accelerated can lead to a quicker return. So regarding the time period for calculating an ROI, technology projects generally look at the financial impact over a 3-year period. This can change depend on organizational requirements. But when developing an ROI model, you have to consider the upfront costs of the solution in year 0, and then take into account the savings generated on an ongoing, the savings generated and ongoing costs from years 1 to 3. Now, to calculate an ROI, from our perspective, there are 2 main parts. And if you remember from the earlier slide, we've actually developed an ROI calculator, which we have on our website, that's available for download. But one of the main determinants of an ROI is the costs and the investment that's involved. So you first need to determine the operational cost to run an AP department. So operational costs include things like AP staff expenses, overhead, any software or hardware that's being used by the AP group, postage, storage costs, whether data storage or physical storage. And there's also another area where you may want to consider including, and although they're not directly operational costs, there are certain costs to AP inefficiencies, such as late payment penalties, missed early payment discounts, and these are generally higher in a manual environment. So when you combine all of these, they all factor into the cost to process an invoice, which is a key metric to monitor from the beginning. Additionally, if you're considering payments in your automation initiative, you want to figure out the average cost of processing a payment. And this might differ by payment type, with paper checks typically costing more to process than an ACH or a card payment, for example. Now, once these have been determined, the next step is to figure out the cost of the solution. Overall, you want to understand the upfront investment, if any, and ongoing costs for maintenance or subscription or transaction-based fees. Now, these will differ whether you're looking at a cloud-based solution or an installed solution. With an installed model, it's likely that you'll have a larger upfront investment with other ongoing maintenance costs. And with cloud-based solutions, it's likely that the upfront costs will be smaller, but there's also likely to be other subscription and or transaction or volume-based fees. The second part of calculating an ROI is to estimate the gains or the benefits. So here you have to attempt to quantify the potential savings that may be generated as a result of deploying the proposed solution. This is the part that impacts the ROI calculation quite a bit, actually. And here you have to make assumptions as to how staff and operational expenses will be impacted, as well as the impact on AP inefficiencies. For example, you have to assume, what will be the impact to the late payment penalties that you may have received before implementing a solution. And of course, if there is a move away from paper checks with the proposed solution, the user will have to project the types of payments that will be utilized. So if you're moving from 70% checks as a payment form to 30% checks, that's going to affect the average cost per payment. And that's something that should be assessed while calculating the ROI. Now, all of these savings and gain estimates are going to be factored into the ROI and will result in that calculation that you get. But a key part of the ROI is the adoption rate. Now, this is an estimation as to the usage and adoption of the solution. And the quicker the adoption, the higher the ROI in most cases. For example, if the percentage of invoices that will be received and processed via the solution in year 1, this may be less than in year 3, because in year 3 users are more used to the solution and more suppliers are enabled. So if this, the more suppliers that are enabled, quicker and the more users that are onboarded onto the solution quicker, that speeds up the ROI. So the ROI and payback period can be made quicker and is likely to be made higher if that's the case. Now to the ROI calculation itself, ROI is basically calculated based on your presumed investment costs, efficiency gain estimates, adoption estimates, and your project's discount rate. So the ROI value tells you the estimated return of your accounts payable project over a 3-year period or a different period if that's what you require. When it comes down to the discount rate, enterprises have different policies for what discount rate to use for technology projects. So the best place to get this information is of course your finance department, but typically a project team will use a standard hurdle rate for technology projects, or they'll use the enterprise's cost of capital as the discount rate. So for many organizations, an ROI calculation would be fine to present in the business case. However, depending on the requirements, they may ask for some of these other metrics that I've put on the slide here. The NPV, which is net present value, and this calculates the value in today's dollars of the projected net savings for the 3-year project. The IRR, the internal rate of return, this is commonly used to evaluate the desirability of investments or projects. The higher a project's IRR, the more desirable it is to undertake the projects. Assuming all projects require the same amount of upfront investment, the project with the highest IRR would be considered the best and undertaken first. And then lastly, what you have is the payback period, which is calculated by looking at how quickly the initial project investment is paid back in net project savings. So that's the ROI section, and you know what we look at when we're thinking about calculating ROI. I'll just have another quick poll question here. What percentage of AP payments what percentage of your AP payments are ACH payments? I'm just going to launch that poll question and give you about 30 or 35 seconds to answer, if you can, please. Have some answers coming in. A few more seconds for that. Okay, I think I have everybody's answers here. I'm just going to show the results. And if you see that, now again, this is fairly typical in terms of what we see in our research. The percentage of AP payments that are ACH payments. Now, typically it's a very low percentage. Here we show 58%, having between 0 and 5% of vendors enrolled in ACH. There were only 8% of you who had over 50% of monthly AP volume through ACH payments. But this is fairly typical in our case. I mean, I think what we see in our research is that payments are still largely made by printed and paper checks, and even though that is the most expensive payment mechanism we have, it seems to be ingrained in the organization, and although all the other forms of payment are less expensive and can generate significant amounts of payments, I think we're maybe starting to see a shift over the last year or two into more forms of electronic payments. And just to go to our last section here before going into the overview of ACOM. Now, we walked through building a compelling business case and how to calculate the ROI. However, there are some key recommendations that we've come up with when going through these initial stages of planning and internal selling. So one is to place your initiative in the context of a larger procure-to-pay initiative and vision. And what I mean here is to take into consideration the longer-term goals and the vision of this initiative when in the initial planning stages. Doing this may save the organization from repeating any efforts. Also, there are often so many competing projects within larger corporations that your second chance at expanding or extending a project may take some time. Engage early and often. I think I've talked about this quite a bit, involving key stakeholders, involving them early and often. The initial returns of an AP project are largely impacted by the level of user buy-in and adoption. So engaging stakeholders early in the process and incorporating their voice is a key strategy for getting it right the first time. Understanding your requirements. You want to understand clearly what your requirements are so they can be positioned very clearly to the solution providers. And to understand your requirements, you have to, of course, uncover your current processes and understand what the current state is, and at the same time determine what you would like the processes to look like and what the future state should look like. So that's obviously a key part of this. Comprehensively define the goals and objectives for this initiative and document a formal scope of project. So now, in a lot of cases, this might be the business case itself, the document, but basically you want to provide a general idea of what the goals are and what the organization is trying to achieve with the project. So is it global? Is it enterprise-wide? What are the processes being automated? What's the timeline? You know, who are the stakeholders involved, etc. So just some more detail around the project. And then finally is to agree on and establish performance metrics. So it's important to continuously monitor progress, especially if you've just implemented a solution. You want to show that improvements have been made and by how much. But to show by how much, you need a baseline to begin with. So establish metrics around cost per invoice, volume of invoices processed, percentage of on-time payments, and various other metrics that are key to monitoring your ongoing progress. And with that, that's the end of my section. I'm going to just quickly hand it over to Jason, who's going to go through a brief overview of ACOM and their solutions. Jason?
Great. Thank you very much, Vishal. And as we see here on this slide, here is an overview of our AP automation solution that actually maps quite well with Ardent Partners' research model that we just saw. We have invoice capture, automated routing and approval, invoice storage and retrieval, and finally we have payment management. Vishal, if you don't mind clicking to the next slide. Okay, let's take a closer look at the solution, and let's start with invoice capture. We can accept all of your inbound invoices in any format. Most organizations must deal with inbound invoices arriving via the mail, fax, email, and even EDI. With our solution, we can accept all formats. All inbound invoices are directed to us from your vendors. Let's just take a closer look at these three options. Most vendors are able to output a file directly from their ERP system, and this can be a text file, it could be a PDF file, it doesn't matter, the solution can accept all formats. The point is here that we can ingest the file, making it easy for the vendor to provide the invoice electronically. And this option includes the ability for the vendor to simply email a PDF copy of the invoice. Option number 2 is we give the vendor a portal where the vendor can input the invoice information on the portal. And this is typically used for smaller vendors with a low volume of invoices. The portal gives the ability to submit invoices electronically. And the third option is our ability to handle the inbound invoices arriving by mail directly from your vendors. The vendors send their invoices directly to us. thereby making you paperless from day one. In addition to mail, we can also handle inbound faxes. Now, one of the key advantages is that vendor adoption is addressed by not asking the vendor to change the way they communicate with you. Vendors may opt to move to a more automated delivery. However, they can continue to use mail, fax, whatever, yet you move to a fully automated system day one, literally. However, based on your requirements, you may want to look at our outsourced SaaS solution versus running the capture software in-house. We offer both. Now, based on your requirements, such as invoice volume, your requirements for PO matching routines, GL coding, and writing that data back to the ERP, all of these help determine which solution is better for you. Again, we offer both and work closely with our clients to help with this analysis and help them determine which one is best suited for them. Okay, Vishal, if you don't mind going to the next slide. Thank you. Now let's just briefly discuss automated routing and approval. Using the solution, once invoices have been scanned and uploaded to the repository, an electronic workflow will automatically be initiated based on your rules that are programmed into the system to route the invoices to the appropriate parties for review and approval. A powerful, easy-to-use GL coding capability using your ERP-specific codes is provided, enabling users to simply select the appropriate codes to apply to each invoice. In addition, our PO matching routine is built based, again, on your specific rules. The key is that we have the ability to use your rules for running the PO matching and the workflow routines. Now let's briefly discuss paperless storage and retrieval. Many other systems require you to log on to a separate database or a separate document management system in order to retrieve copies of invoices. However, with our solution, your users simply stay within their ERP screens to retrieve a specific document. So this makes it very easy for new users to learn the system. Simply highlight any field or click a button within your ERP screens to launch the search. So for example, you could highlight an invoice number field, hit a hotkey on your keyboard, and a web-based search is automatically launched to retrieve not only a paperless copy of the invoice, but also all the other supporting documents related to that invoice will be retrieved on the same search. For example, the corresponding purchase order and packing slip. Multiple manual steps are eliminated, and this will provide a much more automated process. Again, the key here is that your users stay within the ERP system with which they're familiar with to perform these lookup tasks. The last step in the AP process, and one where there is one of the clearest ROIs, is payment management. Most organizations process paper-based and ACH payments for their vendors. What we're seeing in the market right now is a big move towards switching to ACH payments with electronic remittance. And the reason for this is twofold. First, according to NACHA, the cost of producing a paper-based check starts at $2.25, compared to an ACH payment with e-remittance, which will run approximately 17 cents. So the savings is clear, not to mention the increased security. So the issue is not whether or not there is a savings opportunity. The issue is, how do I get more of my vendors to accept ACH payments? Ask yourself these questions. How long have I had an ACH module or ACH capability? Then ask yourself, what percentage of your vendor payments are being made via ACH with a corresponding e-remittance? As we saw in our polling question today, and if you're like most mid-sized organizations, you probably have less than 25% of your vendor payments being made via ACH, and a lower percentage that also have the e-remittance. Why is this so? It's definitely not a technology issue. This is primarily due to the fact that most organizations do not have the resources to reach out to their entire vendor community. Our payment solution automates this vendor enrollment challenge and will help you drive your vendor adoption from the 25% level to 50%, 60%, 70% or more. That is how we help our customers. It's really about driving vendor adoption to high levels. It's not about whether or not you have an ACH system available. Although time will not permit us to do an actual EasyPay Suite demo today, I can tell you that our solution is a fully integrated system that manages all of your payment types, including laser checks, ACH payments, and e-remittance, including email, fax, post-to-web, and file copy archiving. This also includes additional capabilities, including positive pay and advanced security. One of the other benefits of our EasyPay Suite solution that our customers frequently cite as key is our vendor portal that provides 24/7 web access to process payments. This allows your vendors to access past payments to check whether past invoices were paid. And this significantly reduces the number of inbound calls and improves overall vendor relations. Finally, depending on your business requirements, the modular architecture of the solution allows you to start automating your AP process at any stage. AECOM currently has over 2,500 active software customers, each of whom chose to implement where it made the most sense for them. Okay, this concludes the presentation portion, and now we would immediately like to move to the Q&A session. I'll go ahead and read the questions, and then, depending upon the question, either Vishal or myself will answer them. And if you haven't already done so, please go ahead and submit your questions now. We'll go ahead and leave our contact information on the screen while we're going through the questions. Okay, bear with me here for just a second. Looks like we've got quite a few questions coming in. Okay, here's our first question. Vishal mentioned some templates that are available for building a business case. Are they available, or how would I get access to them? Vishal, I'll go ahead and turn that question over to you.
Yeah, sure. So when I mentioned that we've recently published the Smart Set, as you saw, so the Smart Set consists of 5 documents, one of which is the business case template, and that would be available on the Ardent Partners website, so ardentpartners.com. If you go to the research section, you will see that template available, and you'll be able to purchase it on that site.
Great, thank you, Vishal. Okay, looks like we have quite a few more questions coming in. Here's another one. For the capture layer solution, it was mentioned that both a SaaS, outsourced, and in-house solutions are available. How do you determine which one is the better solution for your customer? Good question. I'll go ahead and take that one, Vishal. Here's how I would answer that. Based on your specific requirements, for example, invoice volume, your requirements for PO matching routines, GL coding requirements, and routing that data back to your ERP, all of these factors help determine which solution is better for you. And we'll work closely with you to help with this analysis and help determine which one is best for you. Okay, still have more questions coming in. Here's another one. I am interested in how AECOM automates the ACH vendor enrollment process. Can you shed more light on that part of the solution? I'm sure, I'll be happy to. Using the solution, a variety of customized email messages and or printed messages are sent out to each of your vendors explaining that you now have the ability to pay the vendor electronically and why it's in the vendor's best interest to sign up for ACH payment. So a variety of educational messages go out to the vendor, and those educational messages then drive the vendor to the self-service website. The vendor is then provided with a link to the site where they can quickly and easily then sign up for ACH payment right there on the self-service portal. And by the way, if you'd like to learn more about how we automate the vendor sign-up process, please contact me. I've got the contact information there right on the screen, and we can certainly discuss further. Okay, here's another question. In the webinar, you mentioned how to calculate an AP automation ROI. Could you please explain that one more time? Vishal, I'll turn that question back over to you.
Yeah, sure. So if you think about calculating an ROI in general, some of the key parts that you want to determine are first the cost to run an AP department. So determine the operational costs to run an AP department. And then you have to develop or determine or estimate the solution cost. So depending on your proposed project or proposed solution, you have to come up with an estimated cost of the solution, both upfront and ongoing over the period of ROI that you're looking for, 3 years or 5 years, mostly 3 years. But using those two, you then have to estimate the efficiency gains. So you have your current operational costs, you have your cost to process invoices, you have the cost of the solution, and then you determine how those costs, how the proposed solution will impact those costs. So, you know, how is it going to impact staff? How is it going to impact overhead? How is the proposed solution going to impact the method in which payments are processed, if that's part of your project? And most importantly, how is it going to affect the cost to process a single invoice? So once you determine those things using the adoption estimates and then your project's discount rate, you can come up with the ROI. And again, we have in our Smart Set, one of the documents is an AP automation ROI calculator, which is a Excel-based spreadsheet document. It has very detailed instructions on where you input numbers and outcomes, all of the relevant ROI calculations and other financial metrics.
Great. Thank you, Vishal. And we've had another question here about could we get a copy of the presentation? And yes, absolutely. In fact, we already have an automatic procedure set up within GoToWebinar. In fact, after our webinar today, you'll be receiving a response from GoToWebinar via email with a link to today's presentation. And of course, within that link, you'll have not only the slides, but also all of the audio as well from our webinar today. Here's another question. Does AECOM provide any solutions for cleansing vendor master files? I'll be happy to contact you directly offline to further discuss that. It'll be my pleasure. And let's see, any other questions that came in? It looks like that's about it. Okay, that concludes our webinar today. Thank you so much for your time. We hope this was educational and informative. Vishal, thank you very much.
Thank you, Jason, and thank you all for joining.
Okay. Bye-bye. Thank you.